So cash, which is our biggest asset, I call it our call option. The cash that we have is actually our call option. Next. Now, how do you define cash? What is cash? The best definition comes from our good friend, Mr. Buffett. He says, Buffett says that cash is a call option with no expiration date, no date of expiry. He has an option on every asset class and has no strike price. And he has about $70 billion US cash and still rising. Now, the value of an option is influenced by a few things, one of which is the expiry date and the strike price. The longer the expiry date, the more valuable the option is. It's like somebody gives you an option, it's like the land option that you have. Somebody gives you an option for 3 weeks to buy this piece of land at, say, $1 million, and the option expires in 3 weeks' time. Right? As opposed to somebody who gives you an option for the same land for $1 million, but the option expires in 30 years' time. Now, that 30-year option is worth a lot of money, because in that 30 years, you can decide when you want to exercise that purchase of $1 million. And over 30 years, the land price is going to go up, right? So by the time the land price goes up, you exercise it, then you make money, guaranteed to make money. So the expiry date of an option is important, and cash has got no expiry date. The strike price is also extremely important. In the case of cash, either there's no strike price or it's up to the investor when to exercise it. When you decide to buy a particular asset, let's say you decide to buy a property, you decide to buy a share at a certain price, that is your exercise price. So the more disciplined you are, then the more attractive will the strike price be. If you buy something, an asset that's undervalued, then you got a good strike price. If you buy an underlying asset which is overvalued, then your strike price is out of money. So in the hands of the right investor, cash becomes an extremely valuable asset. And this is what icapital.biz Berhad has. In the shorter term, of course, the cash gives you lower return. But our investment philosophy is that we don't manage volatility. We manage risk, investment risk, which is the permanent loss of capital. As somebody says, he's a retiree. I'm not that far from that. As I explained to some people, when you reach a certain age, you don't have a second chance. And we are more concerned with permanent loss of capital than anything else. Because should that happen, or a serious damage to the net asset value of the fund happens, it will affect your retirement savings. And you may not have the time to rebuild your retirement savings. So don't always look at the upside, because the more difficult part is managing the downside, managing the permanent loss of capital. And we aim at managing the risk and nothing else. Next.